to have a conversation about Alphabet and this major run-up we've seen for Google recently. I think up about 17% just in the last week or so on some major headlines here, leapfrogging Microsoft to become the third most valuable company by market cap. Angelo, in your view, is this a sudden acceleration that's meaningful and we're starting to see some new appreciation of Google, or is this entirely headline-driven?
Marley, thanks for having me. I'd say overall, it's a little bit of both, but I do think this has kind of been long overdue in terms of the re-rating in Alphabet stock. I mean, it really started back in late July, early August, right? I mean, the outcome of that search monopoly case was really, I think what really started driving this stock considerably higher, and that re-rating in the multiple. But to your point, over the last couple of weeks, I mean, we've seen, whether it be tied to Gemini 3 and the launch of that. And I mean, Gemini 3 has been absolutely phenomenal. If you kind of actually look into it, it almost kind of looks like we're at AGI at this point in time. So I think, at this point in time, there was, over the last couple of months, some concern about, hey, listen, OpenAI is getting bigger in the race. They're eventually going to launch their own kind of platform tied to a digital ad market. And I think a lot of those fears have been alleviated to some extent because of the success we've seen out of Alphabet here over the last couple of months. So I think it's been long overdue, but I think it's a combination of some better than expected news flow as well as execution over the last couple of months.
And prior to the last couple of months, Alphabet had been a bit beaten down in terms of it moving slowly on AI, or some of the commentary there was it wasn't moving as fast as it should have been. Do you think that the past 2-3 weeks here are signaling that Google's moved itself to the offense here?
To an extent, I do. I mean, I think it's the combination of that. And again, the success that they've seen here. Gemini 3, I think, is a huge upgrade. And it shows that, hey, listen, OpenAI is not going to be the only game in town. And I think it's also the fact that, hey, listen, you kind of actually start looking at the fundamentals, post Q3 earnings season. This is a company where it looks like now their ad-based businesses, whether it be YouTube and more importantly, their search business, is going to be able to continue to grow at a double-digit pace here over the next 2 to 3 years. The consensus expectations were more mid to high single-digit. And then that cloud business, I think, is really getting people a lot more optimistic. I mean, they reported phenomenal cloud bookings when they reported Q3 results, but also importantly, they're actually expanding their margins on the cloud side, now closer to levels that we've seen from the Microsofts and Amazons of the world. But we think the margins continue to expand for Alphabet within cloud. And that's kind of, that's a really nice story there as you continue to see the strong top line growth, despite the fact that CapEx will continue to go up.
And Angela, how meaningful do you think was the announcement that Berkshire Hathaway had taken a pretty substantial stake, knowing that they generally are cautious about, some of these high growth tech stocks that they're now heavily invested in Alphabet? Do you see that as another driver here, why maybe sentiment may have shifted around Alphabet?
It is additional validation here for the shares in our view, especially when you think about what Buffett typically does. And it probably wasn't a Buffett himself purchase, but nonetheless, it is coming from Berkshire. When you kind of look at typically how they make their purchases, especially, when you start thinking about technology, it is more these higher free cash flow generators that appear to maybe be trading at discounts relative to historical and competitors out there. And, clearly that for years and still to this date, their largest position is Apple. And the fact that they decided to, invest in Alphabet over maybe increasing positions or building positions in other mega cap tech names, I think is, again, validation to what Alphabet is doing here in their fundamentals.
And we're working sort of chronologically backwards in terms of the big headlines that they've gotten, which now brings me to this conversation with Meta to potentially use their chips. You talked about already that they're challenging OpenAI in the models. They now may be challenging Nvidia in terms of chips. How realistic do you think it is that Alphabet becomes the dominant vertically integrated AI company? Is that a possibility in their future?
I do think, listen, when I think about NVIDIA and I think of Alphabet and I think about the rest of the market as far as the compute market, we never thought that NVIDIA's market share was going to be sustained at north of 90%. Our view was custom silicon chips and AMD would eventually take up, a decent piece of the pie. Ultimately, we think Nvidia's market share dips down to, let's call it mid 70s towards the end of this decade. So Alphabet, in terms of being able to take some share, I think, potentially, let's call it mid single digits at some point in time. I think that is realistic. We didn't necessarily see the Meta news coming, but nonetheless, I mean, it is a potential, a new opportunity for Alphabet at this point in time, and we think it's something that they're going to take advantage of. But whether or not it's going to completely unend the NVIDIA story is not something that we believe will take place.
Some of your thoughts on the market action we've been seeing. Happy to have some futures here this morning. Of course, I was scratching my head all morning saying, you don't know. And that almost never happens, right? So it was very unusual. But we got that back. But what do you think about the action we've been seeing?
Well, it's one of those things, and thank you for having me back, Nicole. Nice to see you again. Very volatile, but what I do, what I trade, what we mostly do at Stocks to Trade is, short-term day trading and swing trading. And, this volatility, we love it. Now, I know a lot of long-term investors, people that the buy and hold hate to see these wild swings day in and day out, but we love it. Now, I think a lot of that is created, unfortunately, by all of these, new market participants. You see all these retail traders that are trading with way too much margin. I think, we see it in the crypto markets, all these forced liquidations all the time. You see Nvidia after earnings shoots up, tanks the next day. I think a lot of that is people trading without rules, piling into stuff with margin, which creates volatility. But, if you trade that action using technical analysis, using these levels, it creates opportunity. Now, again, long-term holders, which is probably most of your audience, hate seeing it because they wake up in the morning and big gap down, wake up today, decent gap up, and it's like, what's going on? But from a trading perspective, we love to see it. So
are you buying AI stocks on the dips? I mean, look, we've had an incredible rally now. It was an unusually seasonally weak November, but we've had a recent, sort of comeback. Were you buying on the dip? And if we dip again, do you pick up AI stocks?
Yeah, I mean, going back to having trading rules, like I love the dips on all these stocks. I was on, Trading 360, talking about, Google in the 280s before Warren Buffett bought. I think Michael Burry is way early on a lot of these shorts. So all these pullbacks, I love them. Now, I know there's all these talk of the bubble, and I think a lot of these stocks are a little ahead of themselves, but everyone comparing this to the dot-com boom, I think the biggest difference is, this AI is real. I've compared it to the greatest technology in my opinion in mankind's history. I mean, you look at fire and the wheel and all of these great inventions that mankind created to create civilization. I think AI is those on steroids at the end of the day. Now, yes, obviously all of these stocks are going to pull back at some point. They can't go up every day forever. But, I saw a chart over the weekend comparing Cisco, that big, dot-com bubble burst, but someone kind of overlaid the chart and Nvidia was midway up on that chart on Cisco. So, don't become, a Kool-Aid drinker. If these stocks start selling off, you got to be smart. But I think we're just getting started here. Literally, I think 2026 is going to make 2025 look like a joke in these AI stocks. And, that's my opinion. Now, you have to trade with a plan. You have to be smart. That doesn't mean you keep hoping and praying when they pull back. But that's my read right now.
Of course, I mean, the market seems to be definitely connected to the rate cut that folks are counting on for December. So let's assume that's going into play. Do we get back to 7,000? And do you have a specific AI name, as we move higher? And if it's not and or AI, but some of these other sectors have gotten a pop, like pharma and healthcare and utilities. We're watching games and casinos, airlines, all of these other sectors. So what's your play? Do you buy a specific AI stock and or some of these other sectors that I'm talking about?
Well, my fave is Google right now. I know I keep kind of referencing the other show with Marley, Trading 360, but I was there on Halloween. Loved Google then. It was in the 280s at that point. A couple weeks later, we got the news of Warren Buffett buying in. I mean, listen, when I see, especially, I mean, obviously Warren has been wrong. It's not like he gets everything right, but you look at historically, he shied away from these high flyers. He shied away from, technology, particularly, outside of Apple. He's kind of avoided these types of stocks. And to me, it was a great breakout in the 280s. Then you get Warren coming in, and I just love Google because of the TPU versus GPU story. Everyone's talking about Google being an Nvidia killer, but we had that news over the weekend. One of Google's biggest engineers is like, listen, they're different markets. We're not going to put Nvidia out of business. You can use TPUs and GPUs because everyone needs this processing power. So my favorite name right now is Google because, again, they got all the technology, they got all the backing, and the people that can't get enough GPUs can buy TPUs from Google. So that's my favorite name right now, even though it's parabolic. But when Warren Buffett's buying a parabolic chart, it's kind of like, well, when you got the most conservative guy arguably ever that's buying that parabolic chart, seems like a pretty good idea as well.
And do you think we hit 7,000 between now and the end of the year?
I didn't know you were going to throw me that curveball.
What do you think? You could say
7,000, yes. In the next 4 weeks, maybe not. But I think, I think 7,000 is a layup. Just maybe not in the next 4 weeks.
Okay.
Well, Google's recent rally has allowed the stock to outperform other big tech stocks like Nvidia, Microsoft, and Oracle. Stock is trading at a record high and closing in on a $4 trillion market cap after the successful launch of its new Gemini 3 AI model. Join me now on where Google stands in the AI arms race. We've got Brent Till, Jefferies senior analyst. Brent, always great to see you. So Alphabet, it's in the green again here today. We are nearing that $4 trillion market cap, Brent. Let's start with the latest news. We have the information reporting. Okay, Meta's in talks with Google to spend billions on Google's chips and its data centers. You cover both Alphabet and Meta. You like both those names, Brent. You saw that headline. You saw that report. What did you make of it?
I mean, it's good news for Google, but it's not the end all be all. Remember, everyone is using everyone else's stuff because there's such huge demand. NVIDIA can't actually fulfill all the demand that's needed. So I think no one wants reliance on one vendor, right? So you're going to see diversification where you can do it. Secondarily, right now, everyone's capacity constrained. We talked to Microsoft, Google, Amazon. Effectively, all their backlog numbers are way higher than the reported revenue numbers because they're booking deals that they can't actually fulfill right now. And so you're seeing bookings higher than the revenue because of the demand so high. So I think spreading and diversifying the risk to NVIDIA also, no one actually has enough demand. I think at the beginning of this, or enough supply, at the beginning of this entire movement, everyone felt like we would go to one cloud. We would not make the mistake we did in the cloud in the past cycle, which is spread all our workloads everywhere. And the same thing's happening because you don't want over-reliance and you want, effectively, you can't get enough supply. So you're having to go to multiple vendors right now. So I think, look, the news flow was incredibly negative at the beginning of the year on Google. Everyone thought they were left for dead when you think about the transition to AI from search, and they've done a fantastic job of navigating this. Recently, you've now seen the anti-NVIDIA trade. So everything that's in the NVIDIA camp goes down and everything else in the Google camp goes up. And you've seen this. So right now we're in kind of the flavor of the week, if you will, which is Google's doing everything. There's nothing wrong. They can't make any mistakes. But that's kind of market we're in right now. I mean, honestly, I think Meta's a way better buy down here than chasing Google at current levels. But right now, investors, again, are just chasing the momentum.
Well, let me ask you, Brent, because we talked about Google chips, but I do because I have you here. I want your take on Gemini 3 as well. There was a lot of excitement there. I'm curious your take on that as a financial analyst. I saw Salesforce, Mark Benioff, apparently now, Brent, he's a Gemini guy. He says not Chat GPT. What do you make of Gemini 3?
Look, I think there's going to be a world where we use multiple AI agents. So the topic that's happening in our work is it's not Gemini, it's not ChatGPT, it's not Perplexity. We're going to use multiple agents. We're not going to use just one. And I know that Benioff's excited. He's dropping S-bombs on X about how good it is. But I think ultimately the technologies across the platforms are just getting better and better as you use them every day. There are going to be multiple technologies you're going to use. And so we don't believe it's a vendor take all. We think there's going to be room for multiple agents. There's going to be room for multiple technology vendors. What we've been saying, though, is that effectively there's only a few companies that have the dollars, the capital, and the actual users to make this happen. And you can count on one hand how many vendors can do this, right? It's Google, Amazon, Microsoft, Oracle. There's only a few. And so what I would say is, for investors, you want to buy where the worst sentiment is. You don't want to chase the best sentiment, right? At the beginning of the year, Google had the worst sentiment, and look at the returns year to date. The worst sentiment now for investors to be buying into would be Meta and Oracle. I mean, stocks literally go down every day. And the businesses aren't that bad. It's just the momentum chase to Google is now like, there's not that big a stair step in what's happened in the business. The business in terms of the fundamentals are operating almost the same level as they were operating at the beginning of the year. It's just the sentiment turned. So I don't think it matters about chips or Gemini or whatever. I think it's a collection of things that Google's doing well that everyone should stay focused. Again, nothing to take away. We are big fans. We would stay along Google. But again, I think what you've seen is an oversold sentiment on the other side of this AI trade where, 2 months ago, Meta and Oracle couldn't do anything wrong. And these stocks were up massively, and now they just fell out of the sky. And that, to me, is a signal that something's wrong. When our fundamental work is that there's only a handful of companies that make it, that's, to us, the signal where the buy signal is much stronger at Meta and Oracle. It's not as strong at Google.
On